I want to talk about that right there. Our Babasani noting that we're not seeing upward revisions from the Mag 7. In your mind, is that concerning when we're looking at this market? I also want to note, if you look from the start of this year, the S&P equal weight and the regular market cap weight S&P trading just about neck and neck.
I actually think it would be healthy to see a rotation into kind of letting the other 493 pull their own weight, right? And whenever you have the concentration that we've had in equities, anything that's highly concentrated is unstable. And so if you see the growth broaden out and you see the other 493 begin to kind of contribute more, that'll be a sign that the economy is healthier.
But aren't we already seeing that? Aren't we already seeing the rotation into the other stocks? That's why we're seeing this kind of performance from the equal weight up about 4.25, while the market cap weighted index is about 4.5.
Well, you are, and I think what's important to think about is kind of the backdrop for it all. And we have an environment where there's slightly higher inflation, which is actually pretty good for companies, right? A little bit higher inflation
if they can pass it along.
If they can pass it along, but they seem to be able to pass it along because we're seeing that in the inflation data itself. And the overall growth numbers look pretty good, and people are actually still reasonably optimistic, right? If you look at the economic surveys, the consumer is starting to actually look a little quirky, but things like small business owners are incredibly optimistic.
All right, we're going to get a read on the consumer coming up later today with Walmart earnings. I want to talk about the Fed minutes yesterday. Markets closed higher after those Fed minutes that a lot of people saw as hawkish. They didn't tell us anything we didn't really know. I mean, except for the fact that all FOMC members voted for a pause. Was there anything in there that you thought was notable for investors or they should pay attention to when making decisions going forward?
Well, I think it was interesting to compare the minutes to the Humphrey Hawkins testimony, because in the Humphrey Hawkins testimony, Jerome Powell was saying, for example, with quantitative tightening, the shrinking of the Fed's balance sheet, we still have a long ways to go, which means that there's still a lot more Treasury selling to take place. And when we look at the minutes, they're talking about potentially pausing ahead of kind of the debt ceiling issue. So, it's kind of interesting to see the bond market reaction to that, because I would have put more emphasis on the fact from the Humphrey Hawkins testimony that, potentially that the balance sheet has to shrink a lot more, and that would put up more upward pressure on yields.
Just so everybody's clear, you're talking about Jay Powell's testimony on Capitol Hill.
Yes.
Not as often called the Humphrey Hawkins, but, some of our older school viewers might know, some of our newer ones may not know.
Well, I tend to be a little old school.
And that's okay. Speaking of old school and old money, you work for an insurance company. Obviously, you have a lot of money on the balance sheet. When we're looking at tariffs, it's been a near-term disruption, but for a longer-term investor, who a lot of our audience is, they're longer-term investors, these tariffs, what do they mean to you and your investing thesis? Are there certain areas of the market that you're more concerned about? Are there more areas of the market that you're bullish with the idea that this president is engaging in what a lot of people call a trade war, but certainly a very aggressive tariff strategy?
Well, so first and foremost, I'd say the inflation impact of tariffs tends to be overthought and overdone. Right? If you think about it long term, so over the course of a 10-year U.S. Treasury security, for example, you have a 10-year inflation expectation over that time period. What tariffs do is they do a one-time price adjustment. So they change where the curve is, but they don't change the slope of the curve on inflation. So if you think about it from, you have 3% inflation over 10 years, and then one of those years becomes 4% because of tariffs. Well, that's only 10 basis points over a 10-year period. So it's not really all that much to get worried about.
So not a big deal, but
not a big deal.
Is there a sector that, at least in the near to medium term, that makes you concerned? I know you're more of a longer-term investor when you're managing money, but in the near to medium term, is there one sector that makes you very concerned about?
I mean, there's some we like. I mean, when I think about kind of different sectors, I think financials look really good, banks, because they can take advantage of the inflation story. They can take advantage of the yield curve story. And of course, if the economy continues to do fine, they're in pretty good shape there.